everybody, welcome to the official Trade Talk channel, where I'm going to show you how I look for high probable entries at high probable times. We're going to looking for some trades this morning. We're going to watch Bitcoin, we're going to look at oil, we're going to look at a few other things. But first, good morning everybody. I'm glad everybody is able to make it. Thank you so much in advance for your time. All right, so first trade that I'm looking at this morning would be the oil trade, U.S. oil. However, I'm taking the trade, or took the trade, on the futures side. I am trading the crude oil futures, but I'm trading put options. That's right, over here on tastytrade, you can trade options on futures. That trade is down. Yeah, it's not working out for me so far. I bought this put in the money. Basically, I was looking at it to reject daily resist or old daily support right here. We were trading under it intraday. Kind of got a nice little move to the downside right here on the first attempt to tag the level, but you can see it immediately once it got down here, and I thought everything was all well. It reversed and got a bullish move to the upside. Now, when we look at this thing on the daily, obviously it's been ripping. Everybody knows about oil, how it's brought CPI up and everything like that. This is just a pullback. And typically I don't look to try to short stuff or look for long entries unless the criteria meets my standards. And this does not for a short entry. But I was just, going to try my luck. I wasn't looking for anything but a scalp, maybe a fresh low of day. Then I would take the position off. But I'm going to watch the open. If we get above the open and start making higher highs and higher lows intraday, you can see that we did blast through here and closed above on an hourly closing basis above that level that I was watching. And it is also intraday support. As you can see, yesterday at 10 o'clock in the morning, it made that move to the downside. All right, so then pretty much all of today, we've had a move down lower. So, I mean, this is going to be the open right here. So there's intraday res right there. So I'm not freaking out of the position just yet. I'm going to give it a little bit of time to work. We got a little bit of cushion here. These prices may not reflect what's actually happening inside of the portfolio, basically based on the fact that the market's not open. But you can see we're down $17 on that position. This is a small account for any new person that is joining us live. These are actual funds. We are transparent over here. I show you my trade history. This is what I've done today. I can show you my trade history forever if you want. I have no problem doing that. And this broker is tastytrade. There is the link in the description. I like this broker because you can open an account with $2,000 or $5,000 and have the ability to sell options, which is something you can't do on Thinkorswim anymore. Now that Charles Schwab owns it, the fees have changed. Everything has changed. So in order to sell options, you need a lot of margin. And margin just simply means funds in the portfolio, right? You need buying power, and that's one thing that you need a lot of. But over here on Tasty, they don't require as much buying power because they trust you as a retail trader know what you're doing. As long as you say that you know what you're doing, you get approval for options on futures, and then you can trade micro futures instead of the E-minis. You can trade the micro ES. It works exactly the same as the E-minis, only it's with smaller size, which is good because a small account, you can't trade the E-minis. I think it's like $5,000 for one contract. So, all right, moving on. We're gonna keep our eye on oil. Like I said, if I get another higher hourly close, then I'll just shut this position down, as I would like to see this candle act as supply. Doesn't necessarily mean it will, obviously, but it is under the open, and we don't care about the moving averages on anything but a daily time frame. So oil is the current trade that I'm looking at. I did take a trade on the MES this morning, which is the micro ES futures contract, or an easy way to say it is the S&P 500. Basically, I bought 2 contracts at 43.60 spot 25, and then I sold those 2 contracts at 43.64.25. So I made 4 handles. Big deal, right? Wasn't a very big trade, basically because I didn't like the analysis on it. Let's go look at it real quick, and then we'll talk about Bitcoin. Here it is. Basically, we have broken down from daily support. This morning, when I was looking for the long trade, I was looking for the long trade off of support right here. I took it, made it all the way up to roughly around this area, and then it rolled back over. So this is your current daily range on the S&P 500. If it comes down and takes out yesterday's low, we would be expecting a bounce. If we come over here and pull up, excuse me, if we come over here and pull up the S&P 500, I have taken the liberty for you to draw out the options market expected move for the SPX. The expected move is how option market makers forecast risk for the week. So basically, they are forecasting that the S&Ps could move a potential $80 this week. Last week, it was less than that, significantly less than that. So I'm assuming the reason why and last week we had the BOJ, the ECB, we had the FOMC, we had a lot of news last week. So why so much more risk this week? I think it's just them looking out for themselves. I honestly do not believe that we'll breach the downside or the upside of the expected move. So since we got an $80 move, all I did was take Friday's close, and then I calculated $80 up, $80 down, and that's how you get the weekly expected move. This red line will be Friday. So what we're kind of looking for this week is a two-sided trade. We want to see it just trade inside of the expected range, and back and forth like that would be fantastic. That would give us opportunities, both long and short. The one thing that I definitely would like to see, would love to see, in fact, is if we were to close this gap that was made right here, that would also put us into the top edge of the expected move, and then I can buy some more calls. All right, I mean sell some more calls, not buy, sell. Because if we get up here, that gives us an up move, and then we can sell calls like, 4,600 or something like that. Kind of far out of the money, but close enough to still be able to collect on some nice premiums if in fact it does roll over at the high end of the expected range. All right, this is yesterday's candle. All right, so now we're going to open up probably with another gap down. We'll see what it does here in just a minute. Yep, gap down. So not really working out the way I wanted it to, but that's okay because I have other bearish positions. All right, moving on. Bitcoin doing Bitcoin things. Yesterday Sunday, it broke down from daily support. This is the level we were watching if you were bullish. Obviously, if you took that trade, you were stopped out. That's trading. All right, there's no other way to do it. That's how we do it. Either we're right or we're wrong. It's a 50-50 shot. Nobody knows, ever. But we are bearish on this channel right now on Bitcoin based on the structure that we currently have. If I pull up the moving averages, you're going to see that we are very, 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 very close to making a death cross, and that would be the 55 and 200 exponential moving averages there. If we change that to 50, there could be a chance that we have already, in fact, closed or at least crossed. Yeah, you can see that we have crossed if I change that simply from a 55 to a 50. I like the 55 just because it's the default settings. That's what I'm used to trading. But we already have the death cross if you look at the 50. One of the members in my chat said, what now since we've got the cross? And then I showed him that we don't have a cross. But then I was thinking, well, maybe we should check out what it looks like on just the 50. And you do have that cross. So that's probably what he was looking at. So apologies to you, my friend. You are correct. You do have the death cross. So yes, we are looking for swing highs to sell into. For that, we're going to use a futures contract from Bitget. If you are in the U.S. and cannot use Bitget, there is a link in the description for an exchange called Weeks, Weex. There is a link in the description. If you use that link, you will save 20% on all trading fees. But that's if you just want to trade the futures. That's the best way to hedge against your Bitcoin, right? The Bitcoin that you're holding. But I haven't been able to get into a position yet because I just didn't think that Sunday's move was high enough. It did not liquidate that bullish swing high there, and that's what I was waiting on. It didn't occur. So I am still setting neutral. I do not have a position open, and I am waiting for one. When we get to death cross, I don't expect a big, massive move to the downside. I would assume probably that Bitcoin might make a little fake out move back to the upside to try to offset the cross, because on the weekly, the 200 exponential is literally propping this market up, and on the weekly time frame, the 200 exponential holds a lot of weight for me and other traders as well. They will be focused on that, and it's hard for me to believe that many people are going to take shorts anywhere near that, because they're going to look at that as support. Now, if we get the breakdown and a confirmed close below, then that's going to be it, right? That's pretty much going to be the end of it. You will have a death cross, and you will have broken beneath your 200 exponential. Your 200 simple has already been closed below. All right, there it is. This straight, erect red line. That is your 200 weekly simple moving average. Not looking good for Bitcoin bulls right now. But, you know, these are generally areas you would look to be a buyer. However, that death cross on the daily is going to loom heavily on Bitcoin's shoulders, in my opinion. So, yeah, I'm looking for short entries. All right, so that's that. Let's run let's run back over here to oil and see what it seems what's going on over there. It looks like it is struggling to go to the downside. I mean, it makes sense because this thing has been nothing but bullish since it bounced off of monthly support down there weeks ago, and the dollar has made its exponentially move higher. I mean, it's up 10 straight weeks. Let's see if you're up on the week this week. Yeah, this week would make 11 straight weeks if you were able to close above. We did liquidate 2 monthly highs. Those monthly highs, a lot of people are going to refer to them as equal highs or whatever, a double top, whatever you want to call it. But this is the highest monthly wick. So the next monthly wick to liquidate would be all the way up here in the 113s. So since we have liquidated these wicks right here, we are expecting the dollar to potentially start to get that pullback soon, because 11 straight weeks up is like, it's unprecedented. In fact, there was only one other time in history back in 2014 where I found that had happened, and in that span, it essentially went up 12 straight weeks, had 2 weeks of pullback, and then just shot to the moon with weekly pullbacks in between. So, but that's what we're kind of looking for here. We're kind of looking for a bearish weekly close, maybe 2, and then we can look for, start looking back at long dollar positions. Now, the dollar can chop around in this range if it wants to. It's got a big range to do so. So we will see what happens with the dollar moving forward. I do like the fact that the dollar has made this move straight to the upside, and Bitcoin did not make a similar move to the downside. That's good. That means Bitcoin's trading on its own supply and demand factors. The problem with Bitcoin right now is we're seeing 5-year lows on all exchange volume. Exchange volume is what you need. It lets you know that people are participating in the asset itself. If you don't have strong volumes, then you're not going to have big moves up or down. I mean, you can have big moves up and down with light volume. I'm just saying you're not going to have any sustained bull market rally. Now, I am aware, very much aware, in fact, of the bullish catalysts that Bitcoin currently has, potential ETF, the halving, and all that stuff. But there is also a recession out there that is looming. Bitcoin has never been through a recession. The one time that we did get a recession, Bitcoin dropped all the way down from 6K to 3K, which was a 50% loss. That time, which was during the pandemic, which was right here, this time, when this happened, the Fed stepped in and basically put a stop under the markets and gave them this massive bullish bid. All right. It was the Fed that did that. If the Fed would not have stepped in, Bitcoin probably would have taken out the bear market lows of 2018, 2019. Oh, what is it? Oh, it's December 18. That's your low. So, yeah, if the Fed would not have stepped in, I'm sure Bitcoin would have taken out that low. So that's the main concern right now for a lot of market participants. Are we going to, or are we not going to have a recession? We've got record rate hikes that happened from 2022 up until now. There's a lot of analysts out there that think that there is not going to be any more hikes this year, but 12 of the Fed members voted on one more hike. 7 did not. 12 voted for one more hike, 7 did not. So that is important to understand. You have 12 hawkish members of the Fed. And even though Jerome Powell tried not to make it a hawkish speech, it did come off hawkish based on that info alone. He was trying to be, extremely dovish, talking about the same thing that he always says. We're just trying to get inflation down to our 2% target, and we may have to stay at these levels for much longer, blah, 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 restrictive levels and all that stuff. Yeah, that's not super bullish for the market. And since we had our last CPI, since we had that last Fed speak, the markets have done nothing but one thing, and that is rolled over. This was CPI. We got the news. We sold a put. We took profits that day. Then we got short. All right. Then we've been short ever since that happened. You can see that you do have a fresh low on the S&P 500. This is a CFD index, so it doesn't track 1-to-1 with the ES futures or 1-to-1 with the SPX. They kind of do their own thing, but they are very close, very closely related. So we have a lower high and another lower low, and you can see today that you are bearish so far, right? I do expect to pull back. This was a pretty big downside move there. Doesn't mean we're going to get one, because if the markets are going to roll over, if we get tech markets come off, the S&Ps are going to go with it. Let's take a look at the advanced decline line real quick so we can get an idea of what the broader market outlook is. We don't want heat map. We want this, and we want the S&P 100. Oh my God, it is super bearish. All right, so there you go. You got 8 advancing stocks in the S&P 100. Sorry, the 100. You've got 8 advancing, now 10, 91 declining. That's almost complete correlation to the downside. Guild up, BIIB is up, COF is up slightly, AIG is up, Apple is down, which is big, tech is down. All right, so let's go look at tech. Let's go look at our positions. All right, so we have a Zoom short call on. Let's go take a look at Zoom. Maybe. We'll take a look at Zoom. There we go. All right, so here we are. Zoom is testing the yearly opening range. I have a short call setting at 74.50. It is very close to near-term price. I understand that, but it's like far out. You know what I'm saying? Not far out. It's got 10 days left to expiration. I got all the moving averages situated here. This is a bearish structure. So I am looking for this to eventually roll back over, maybe test the bottom end of the range at 64.53. If that occurs, then I will close that position for straight profits. The position is currently up $19 on the day. I signaled this FXI position. Oh, wait, no, not that one. It was Meta and what else was it? A position we closed yesterday. All right, so the only position that we still hold that I signaled was Meta. We have a put spread in Meta. Let's go look at FXI, as that is just a put, a long put, FXI. This is the Chinese large cap ETF. The reason I got short on this was the moving average structure's bearish once again. I mean, completely bearish, splayed out perfectly bearish the way you want to see it. Price is trending under it. On Thursday, from Thursday to Friday, we had this huge gap up, and then I bought a put because we traded right up into daily resistance there at 27.30. So I bought a put that was in the, or right at the money. It was $27 put. So we gapped down yesterday, but we closed up. Gap down. Let's see if we close up today, or does it roll over after filling the gap? This thing does gap a lot. It is very gappy. Very, very gappy. So I don't know which, we filled this gap. So maybe price goes up to fill that gap. Who knows? But this trade right here is a long put. So time is of the essence. In fact, I'll probably end up closing it today, seeing how it's the biggest winner on the day. Oil is continuing to go up, so I'll go ahead and shut this position down, as I'm not just going to sit in it and lose hoping that it comes back down. It is very strong on the day, so we'll review that order. We'll just send it through. If oil starts to act like it is in fact going to roll over, I'll just take another position. There is no PDT or pattern day trading rule on oil futures. I can trade them as much as I want. I can take 57 entries a day in that contract if I so choose. But I mean, yeah, it's super strong. Not liking that at all. I kind of thought we'd see a pullback, a deeper correction on oil. Maybe back down here to the monthly resistance. This is the level that I am looking for oil to pull back to, which is 86.36. If we get down there, I will be looking for bullish entries. Bullish entries. All right, we just got filled on that oil trade. What's up, man? Good morning. What's happening? Let's make a move. Yeah, I mean, I know you want to. I want to. Everybody wants to. Bro, there just isn't a trade to make. I mean, you're trading like right at daily support. Will it reject at daily support? Maybe you can watch that, but I'm just saying, like, I want to take a short on a high of day swing, right? Not a low of day swing. All right, there are a couple of you that I'm speaking to. When you short lows, you are going to get stopped out. I mean, that's just the way it works. Breakout, breakdown trading. For me, I never could make it profitable. Maybe you can. I don't know, but you don't do that. You don't buy breakouts. It's just not the way it works. This would have been a breakout. You'd have bought it. Puke, right? Breakout, you bought it. Puke, right? Yeah, no, you sell swing highs. That's where you're looking for your short entries. If we could get a pop back up to that daily support level, liquidate yesterday's high, and then hold as resistance there, I could potentially take a short entry there. But I don't like where it currently is. Risk markets are falling off. So there's nothing we can do there either. I was looking for a short entry on it. Was looking for a short entry, but it never retested the VWAP. So for an intraday scalp, I needed it to test this and then reject. If we get that, I will take a short entry on the MES contracts. So my internet is being stupid as hell today. I mean, bad. So I understand that it is probably spinning up on you guys. If it doesn't hold, we'll close the stream down. There's no point in streaming if the internet is not going to work with me. It is bouncing all over the place. Let me push this down. Maybe it'll hold better. I'm going to give him a call today. Something's definitely wrong. So we'll see what happens. I have the other one up and open, but obviously it's not going to work. If I switch to that internet, it will kill the stream automatically. So yeah. I tried to stream on StreamYard the other day, but they only broadcast in 720p. And 720p is very bad. It's very bad. When you look at it, it's like blurry and stuff. So with StreamYard, I could do that. Right? I could change the internet out real quick and it wouldn't screw the stream up. But I wasn't going to do a stream because of the internet problem this morning, but whatever. But yeah, that's what we're looking for. We're looking for intraday short scalps on the S&P 500, potentially for a trend to the downside day. Everything else, you've got a slight pullback on the dollar, but now it's starting to move to the upside. Not sure what's going to happen here. It traded back down to the December 2022's target. That's the area we were watching for the liquidation. You can see that the liquidation occurred, but then you still ended up getting a nice move to the upside. So we'll see if the dollar wants to pull back and relax for a couple weeks and then give us new short entries on Euro Aussie or Euro USD, Aussie USD, Pound USD, and stuff like that. So Pound USD is printing intraday piano keys. Euro Pound, it's just doing whatever it's wanting to do. It's doing its own thing. Euro Pound has been kind of strong, so I don't know about shorting it now. USD CHF, we're still in this long, and we will be because our position is low enough. I think we would be safe if we get a pullback. So if we got like, a pullback all the way back down to around the 21 there, the yellow line, we could hold on to this position and see if it wants to go higher. That is, of course, if the dollar wants to go higher. I don't expect the dollar to reverse and become bearish again on the year. There's just too much risk out there. Too much risk out there right now. But it would have been nice to catch the S&P short. And it still might happen, right? It still might happen. You still might get a retest of the VWAP. If it is going to happen, I would like to see it happen in the next couple hours. But I'll be watching it all day. Yeah, it's breaking down pretty good now. Let's go look at Meta because we are in that trade as well. Yeah, it's up on the day, but it gapped down from yesterday. Yesterday it closed up here, gapped down, right? So there's that. And what else was there that I wanted to discuss? Let's look at Tesla real quick. Maybe, once again. Yeah, Tesla traded up to daily res, retesting this ascending trend line there. It's a long one, right? But it is what it is. It's already broken it. So if I would have been looking for a short on Tesla, I would have been looking for the short there at daily res. Right there. 247.10. Doesn't mean it's going to trade to the downside for the rest of the day. That's just the area where I would have been looking and interested in taking a short. So US oil might roll back over, but it's one of those things. We might have to give it a day or two to basically either find resistance and then pull back, or let it chop around and do whatever. On the daily time frame, it's not bearish, it's bullish, but I don't think that that's a good enough pullback. But I guess it would have been. Technically, I was looking for 87.58 for the pullback zone, but we'll see how it plays out, how it shapes out today. Does it close above this support or not? As you did hit the open and you are rejecting, but I wouldn't consider that a massive rejection either. So, I mean, it is what it is. MPW long. You've asked me about this trade for several days in a row, Brian. My opinion is it remains the same, bro. It's bearish. It's just bearish. You're just trying to catch the bottom, is all. I mean, there is no technical reason why anybody should be looking to buy this. All right. You did get a bounce there. I mean, it does look like it's at some kind of support, but you're literally just trying to pick the bottom on this. And I don't understand. I don't understand how, if you've made money on this trade, I don't understand how. Because intraday, you can just look at it. It has not went up, right? From 515 to 528, that's a 15-cent move if you were lucky enough to catch that. I mean, you might get those 10, 15-cent moves intraday, but overall, the asset is bearish. It needs to find support. You need to let it find support, and it has to take a while to find support. Like, look how many weeks it took for it to find support here before you got a nice bullish run out of it. But then ultimately, what happened to it? It got sold off. So that's what happens in a downtrend. You need to look more for those trending trades. Trending. Or at least, at the very least, let it get back above the 21. Right? When it's in free fall like this, just catching bounces is impossible. It's just impossible. We tried to do it on this yesterday and got stopped out, just based on the fact that if the dollar was going to liquidate those swing lows or swing highs, those double highs, it would roll over. But it didn't, and it ended up stopping us out. That's what happens usually when you try to catch bottoms or tops, for instance. You can see the reason for the short trade on Meta, right? Here's the reason why the short trade was taken on Meta. There's daily resistance here. There's daily supply there. You broke under the 50 on the RSI, which means that you lost your bullish momentum, all right? And then a retest of the 50 yesterday, even though you closed above it, you gapped down today. So more than likely, the sellers are going to hit it each time it comes up to test it, right? Once you break under it, each time it comes back up, the sellers are probably going to look to hit it. Unless people decide, hey, there isn't going to be a recession and we've gotten, a few weeks of consolidation on Meta, let's buy it, right? Because ultimately it is in an uptrend, but near term, we can look for shorts. As long as we're closing dailies under the 21, we can look to scalp those ranges. 295 would be a decent target to take profits. Microsoft, I mean, it's already broke down below the 100, and these are heavy tech giants. Like Apple and Microsoft are the two big tech giants. They have that. This has done some damage, right? Bob Iger came out the other day and said on the 20th, I think the article came out and said that we're no longer, I want to slow the noise down on the culture wars. Well, a year and a half ago, they were saying that there is no such thing as a culture war. So now he's admitting that they have been participating in a culture war. And look what happened to the stock. I mean, Disney. Sorry, that's Apple. Let's go look at Disney. I thought I pulled it up, but I didn't. I was looking at it on the other monitor. But here, right? The 20th is when he said that. And then it just blip, down she goes. So, like, I wouldn't be trying to buy Disney. I would be looking to short Disney, like in these areas, swing highs. It's hard to find them sometimes, right? There's no lines to look. But there was, in this case, there was a beautiful place to look for shorts right there, 9206. Would have been a fabulous area to look for short entries. You just got to wait for price to get up there. You got resistance right here. That's not resistance. That's resistance. Look right there. And also you had the 50 there. So that's why I sold a call on it. I sold a call on Disney. That's why. Because it's trending down, right? It's trending down. Nobody likes Disney right now until they get their act together and still they start making good movies and good cartoons and stuff like that again and become a wholesome family company again. Go back to their original values. Until all that happens, Disney's going to get crushed. The same way Bud Light did, right? The same way Bud Light did. You'll find that the majority of the world is not like the fringe. The fringe, the people that want you to change your whole company just to suit them. No, you do what works when you're in business, and when you get off that track, that bad stuff tends to happen. Netflix pulling back pretty decently, testing the 200 now. So not looking for short entries on test or Netflix just yet. But if we do get the breakdown, any pullback, say to June open, for instance, we'll look for short entries on it. We'll buy puts on Netflix. I mean, the whole tech sector or the magnificent. I know this is not this. There's 8 stocks up here. Netflix is not part of the Magnificent Seven, but before these were called the Magnificent Seven, they were called something else. They were called FANG stocks. FANG stocks, right? These were your FANG stocks. So they're still the same ones. They're the same stocks that made the rally happen in 2021. You know, they're the same ones. So they pretty much only go up except for when they aren't. All right. But this is the monthly and that looks bad. It didn't make fresh all-time highs. I think Apple, Microsoft, and Nvidia are the only ones that did make fresh all-time highs. And to be honest with you, I went back and looked in history, and there's never been another bear market low made once Apple puts in fresh all-time highs. That is, if the secular trend continues. The secular trend being up, right? It's up. So Apple could catch a bid here. That's why it's struggling to break down. It's a decent pullback on Apple since straight up move, right? Then you had a pretty bad come off. This had to do with some bad China news and stuff like that. So if Apple's going to rebound, it could potentially rebound here somewhere. It's just on the near term, I have a more bearish bias than a bullish one. But when we get closer and closer to that 200 exponential on a daily time frame, I'm not looking to short into that because that could be support. It could absolutely be support. And we don't short into support. We might actually sell some. Well, I don't think we'll sell puts. If we're going to take it to the long side, we'll buy calls. That's the way we'll deal with Apple. We do believe we're going to get a pullback. right? I mean, it was a nice move to the upside, and then that Chinese news broke where basically they banned China government employees from using iPhones. And then Amazon had a nice pullback the last week or two. So we could be getting ready to see rotation into other sectors. Let's go see if we got any of that happening right now. I know Walmart was trading at all-time highs. Financials, we took a bearish position on that. Unfortunately, I closed it for a loss on the same day that I closed that trade out for a loss. If I would have just held it, it would have been a profitable trade. But it was getting pretty close to the end of expiration, and a lot of other factors was going on there. But yeah, I'm bearish financials. XLE, this is going to be because of oil. It's up on the year. XLC, so communications sector still strong. Still strong. Retail it's losing it. Consumer discretionary is testing the 200 almost. Materials down, but bouncing off the yearly opening range. However, we're not looking to sell calls on this till we get back up into 80-70-ish, 80-70-ish. Anywhere up in here, we'll look for that downtrend to continue, because you literally broken down on your 21. Oh my God. Industrials are getting killed. Healthcare is getting killed. I mean, it's not even, healthcare barely made it back up to the yearly opening, and then it dropped. So I don't see any capital rotations currently happening. I mean, communication went up with tech. Here's consumer staples getting annihilated. However, if the market does roll over, this one would be a good one to look to potentially get into. Home builders, it's rolling over. Real estate, it's rolling over. Real estate's rolling over in a bad way. And then ultimately utilities, rolling over. Utilities is in a full-on bear market. I mean, your moving averages are structured as bearish as they can get. So any pop in price on this, utilities is kind of like a safe place too. But if we do have a recession, depending on how bad the recession is, it will determine how low these things go. Here's your semiconductors ETF. There's a couple of them. Here is SMH, VanEck semiconductor ETF. Got daily support. We're setting that 140. You're getting ready to trade back into it again. Yesterday you had a nice pop on SMH. Today you're gapping down. This is the bank ETF. It's this one we might be able to take a trade on if there's enough. What was that? KBE. I don't think there's enough premium on it. Oh, it doesn't even have weeklies, so no, never mind. To be fair, it's got 10-cent wide spread too, but it does have some premium on it. 52 days out, but we need to let it pop up a little bit higher. So we have an old support here. We could look for maybe a rejection there. 37.69 might be a good spot to look to sell $40 calls or $39 calls. But it's down on the year, so, and you've made that, you got your death cross, all that good stuff. 200 is above the 100, above the 50 is above the 21. That's a bearish structure. So we look to short into bearish structure whenever you get a pop in price. What is this? Vanguard Total World Stock Index. We'll know what that is. Vanguard European ETF. Getting slaughtered. Getting slaughtered. And ultimately, ITB is a construction ETF. It was doing good, but it rolled over. So a lot of things are rolling over. That's all the sectors for the S&Ps. Oh, I guess it's only normal that we're having a 1% down day on the S&Ps. Will it give us an opportunity? It's the further it gets away from the VWAP, the less likely that is, but we'll see. And it may just want to liquidate yesterday's low, which is down here. This is yesterday's candle. Upon liquidating that low, it might bounce. I wouldn't buy it based on that because there's no news. Well, there was news at 10 o'clock. It was news at 10 o'clock. Let's go look what it said. Consumer confidence, 105.5 was projected. We got a 103. And then new home sales, 675. So home sales are going lower, lower, lower. New home sales should go lower, lower, and lower because of interest rates, right? People that already own a home and have those locked in mortgages, they're good, right? Because they're, no matter how high the interest rate goes, they're locked in at a 2% or 1.5% interest rate. New homes, however, no, you will not be locked in at that low rate. You will actually be paying a lot more. So new home sales should be falling. 675,000. That's crazy. Yeah, that's a pretty big drop. That's probably why we're seeing the markets come off. All right. Any questions? Let's see here. Every now and then you lose connection for more than a minute. Yeah, I know it. Trust me. There was 42 people watching at one moment and then poop, dropped down to 25. That's why I looked at everything. There's nothing I can do about it, guys. Nothing. Right? I'm going to call AT&T today and see because the last 2 days it's been bad. I changed the settings on OBS, but still, you got to have some kind of internet in order to stream. That's why I don't know if we're going to continue with this process, to be honest with you. I'll probably just upload daily vids instead because the uploads go quicker now. It's off a cell tower. It's home internet, but it's using 5G. So obviously, it's not going to be a stable connection, and that's what I really, really need. Until I'm able to get that, I'm stuck with this. I bought a $500 modem. It does absolutely nothing. Nothing to help. So, it just is what it is. Daily uploads may be the direction we go with this channel until we get the internet completely fixed to where I can stream whenever. I thought I had it fixed. When I first bought the AT&T Air, it worked like a dream. Had great download speeds, great upload speeds. But like I said, yesterday and today, it's been jacked up. I reset it 3 times already this morning before the live stream. It's got good enough internet to trade. It just doesn't have good enough internet to stream. Sorry about that. Riot tagged Monday's high. Let's go look at Riot. It did indeed. But Tom, it's come off quite a bit, my friend. I'd like to see it. The further it gets away from the 21, the less prone I am to short it. You're also building in bullish divergence. You don't have divergence from here to here, but you have it from there to there. So, I mean, people are going to look at that, call it bullish divergence. But if we could get a pop back up to $10, 10.09 or something like that, or even as high as 10.61, yeah, we'll short it. We will short it. What's Mara doing since we're looking at Riot? It's doing the same thing. That was a great call. We took that trade. I posted it on Twitter. I mean, fantastic. Just straight down. Straight down. And then coin. It's pretty much doing the same thing as the other two, right? It's giving back all these gains, but trying to hold support. Will it? I don't know. I don't know why that line is marked. It must be a weekly or something. Yeah, it is. It's like a gap. But that gap has been filled. We filled it last week. So yeah, a pop. If we could get a midpoint test to last week's range on coin, maybe we could look for short entries there. We did just lose the 50 on the weekly, so I do like it lower. And I could see it tagging all the way down there because a weekly RSI, it's fully cycled, right? From oversold to overbought. So if it's going to cycle back down to oversold, we will sell it. We need it at about $78 to sell it. If we can get that, we'll take it. Could I look at the US 30? Sure. Which this is the Dow Jones, but it's going to be not good. So you lost your uptrend that you had there. You're coming into multiple weekly supports, right? That's going to be support right there. It held as support for multiple weeks. So wait to see if you might get a bullish bounce here or not. I don't know what ETF would track that. IWM is small caps, Qs is NASDAQ, SPY is the S&P 500. I don't remember the ticker symbol for the Dow. But we got bad news on the new home sales and the consumer confidence report. So it might break through there. But this is a good area to watch. Maybe not today. Maybe tomorrow it breaks back up. Building permits. Yeah, I understand that. XLU longs. Well, we just looked at every sector. No. Nope. It's bearish. It's bearish. See, like, you had to move up yesterday, gap down. Do you close down? I wouldn't buy this. Especially since it's got so much bearish momentum this morning. I mean, that's these sectors don't move that much, right? And this morning it's like moving like Tesla. I mean, it hasn't even dropped a full dollar yet, but like I said, these are low beta. These things don't move quickly. They're slow movers. I don't know what that white line is for. Let's go see. It's a weekly support. So, weekly support held there. It held here. Will it hold again? I don't know. Would I buy it just based on that? If I did, I wouldn't be looking for much. I wouldn't be looking for much. There's your hourly. It's headed straight for it. So if you are going to buy it, wait for 62.15 at least. But I don't like it. Bearish DXY news out right now. Yeah, but unfortunately, the DXY isn't the one taking the news bearishly. It's the other markets. The S&Ps are down 1.26%. The NASDAQ is down 1.13%. The Dow Jones is down almost 1%. The Russell, though, it's lagging, I guess you could say. Bouncing from its yearly opening range. Yeah, the Russell seems to be bouncing or trying to bounce from the yearly open, but it is bearish. It is bearish, but it could bounce from here. Intraday. Wow, what the hell is that? Big spike to the upside, but it's coming right back. Let's see if we can, let's just see something. So they don't have a micro contract on that. No micros on the IWM, but the Russell. But it did get a big pop. A yearly opening range there. But if everything else continues like this, then I would expect it to do so as well. Bitcoin breaking down. That's yesterday's support, or the day prior. Not yesterday, but this day's support. Obviously, it would have been a beautiful entry, but you would have had to, I mean, where do you get your stop? You know what I mean? But, I mean, it tagged it to perfection right here. Perfection. Those are the areas to watch. I'm telling you. When the halving happens, does that mean that Mara and Riot have to incur twice as much mining costs, or does it make no difference to profits? I don't know anything about mining. I have no idea. I mean, it's supposed to, yeah, it's supposed to cut it in half, but I mean, it makes it harder for them to solve the problem, and they get it's like it's cut in half essentially. The block reward is cut in half, but I don't know if it necessarily ruins their profits, because they're awarded bitcoins by mining. So depending on how many bitcoins they have, if Bitcoin does get uber bullish for the halving, then they're going to make a lot of money on the Bitcoin that they currently hold. So even though that it might damage the mining aspect of it, but it's not really going to damage their profits. Now, if you get a halving and Bitcoin does not moon, but instead crashes, that would be different. Apple close to take out last month's low. Yeah. And if it does, it could bounce. That's one thing you got to worry, or not worry about. It's just one thing that you got to keep in your mind. Like out last month's low, does it bounce? Or does it push on down to look for the next liquidation? Now, I'm not saying that just because you lose this wick that the next wick that it has to go to would be there, because you got 2-week wicks, you got weekly wicks. Like this wick is lower than the monthly, right? You got these 2 wicks that it could run and look for. You got your weeklies and your dailies. So I don't know if it's going to bounce there or not, but it would be a lower high, lower low for sure. I'm watching out for that. Good morning, Janet's thoughts. Unfortunately, the position I took was a short on Meta and not Apple. I could have taken them shorts on both of them, but there are the positions that I'm currently setting in. So FXI is almost to 50% profitability. So I'll hold on to it for a little bit, see what happens. Zoom itself is almost at 50% profitability as well. And then Meta needs to get to, I think we analyzed this position, and it needs to go much further in order to generate the theological P&L. So the trade was put on for a minimum loss of 115, or a max loss of 115, but a max gain of 135. But in order to get close to that max gain, price needs to get all the way down to 266.83, as that would be one standard deviation given the expiration date. All right. This is a bell curve. These are your 1 standard deviation lines. These are your 2 standard deviation lines given this expiration. Those deviation lines change depending on the expiration you select. So yeah, in order to get to full profitability, you would literally need it to get out beyond the 225. I'm not going to hold it that long. If we get to this area here, I'll take the trade off. But 267, that's still a pretty good piece away. That's all the way down here, right? This is where Meta would need to get to for that trade to be almost fully profitable. So I probably won't hold it that far. My general rule of thumb is when I get into a position, once the position has generated a 50% return on the trade, not on the full account, 50% return on the trade, I close it and open a new one. Just keep consistently bringing in those small wins, right? Small wins, small wins, small wins. Given that over a period of time, the account will grow rather substantially and pretty quickly. I mean, that's a 20% return, and well, now it's more than a 20% return. At $6,000, that's 20%. This is 22%. So since July the 12th, this account has generated 22% returns. That's not bad. That's literally just a couple of months. And if you had a larger account, then you could make enough money to survive on just by doing this. Just by keep rolling those positions out. Keep your winners small, but try to get those, keep your losers small. And sometimes you're going to get lucky and you're going to have a breakout trade, and it's going to be like, wow, right? Those are the ones that literally grow the account tremendously. Since we've been looking at Apple lately, I thought I'd update you on a previous conversation. I sold 2/3 of my Apple position, bought the yearly open, sold at 179. Not bad, man. That's good trading, bro. I mean, to say that you bought the yearly open on Apple, that's at 130.28. That is good trading. Good trading. You definitely want to take profits. I mean, you can keep a small piece on, but the whole reason that you enter into a position, whether it's for an investment or whether it's for a trade, it is to make a profit. It is to turn this amount of money into a larger amount of money. That's the goal. Why people don't take profits is it behooves me. I don't understand it. That's what we're in this game for, right? To make money. So when you're in profit, take it and then try not to give it back to the marketplace on your next entry. Like I said, I'm not always right. I lose trades. But if you do it the smart way, the way that I'm trying to teach you guys, you'll change your life. It can literally change your life. But I mean, Brian has a very consistent hit rate. I haven't seen proof of his success, but if what he's told me about his success is true, then I mean, I don't even know why he's asking me questions. You know what I mean? Because I mean, he's seen some insane returns. But I mean, everybody did at the beginning of the year, because I was telling everybody at the beginning of the year, hey, if you want to buy your favorite stock, Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, Netflix, Intel gave us a freaking phenomenal entry, right? It's pulling back now, but so is the rest of tech. Intel, we brought it up because it was lagging the rest of all the other tech stocks, right? Intel was kind of hanging out around its yearly open while everything else was just moonshot. But ultimately, you did get a nice run from $26 up to 40. Even right here, if you'd have bought it there and then sold it here, you did good, right? You did fantastic. That's a nice return. Nice return. But it's pulling back pretty good now. You'd be up 27% right now if you bought the yearly opening, which isn't bad. If you can do that consistently year over year, generate 27, 26% a year, you're going to be in the top 5%, top 10% of traders out there. Because most Americans can't do it. What Americans can do is give their money to money managers, and then money managers just deploy a 60-40 portfolio. And yeah, I mean, they don't care if the market crashes with your money in it. They'll just say, that's the market. They don't try to help you. They just invest your money for you and then charge you a ton of fees in the process. What I'm teaching you is how to manage your own money. Your own 401ks. You can open up an IRA, and that all the profits that you make in an IRA are tax free. But there's few things you can't do in an IRA, right? You can't short stocks, but you can sell calls or puts, which is it's the same thing almost. I'd say it depends on the price of Bitcoin. What does? Want to change? Start now. What depends on the price of Bitcoin? Everything depends on the price of Bitcoin. P&L does. Everything does. right? If you're in Bitcoin for one reason, because you want it to go up. There might be a couple people out there that think Bitcoin is worthless, but smart investors are not going to just short sell something because they think it's completely worthless. If you would have tried to short Bitcoin I don't know, at every peak, you might get lucky, but you also might get ran over. Say when the fresh all-time high of 19K was broken, if you would have waited to take a short at, say, 20K, because it's a big figure number, you got ran the F over. Bitcoin went all the way to $69,000. We need hype, and we need to be able to have free access to it. Like, everything is going to change next year. Hopefully, right? We got the halving coming. We need Gary to approve an ETF, and then, yeah, I think Bitcoin could potentially moon again. However, is it going to be as big as it was through 2021? No, it's not. And the reason is because that was when interest rates were at zero and the Fed was literally buying. They were buyers of the marketplace, right? They were the Fed put, if you will, they put a stop under the market. That's what, and then they cut how many stimmy checks. That's what forced Bitcoin to the moon. We have completely and totally different circumstances this time. This time we have higher inflation. We have higher interest rates. There's a recession potentially looming. I mean, the yield curve inversion, this is like, I don't think anybody's ever seen a yield curve inversion this bad, right? Especially with the 3-month 10-year, at least. At least. Let's see if we can get max. Yeah, I mean, this is the worst inversion that we've ever seen for the 3-month 10-year, ever. As far as the data we got here, right? I know there's data that goes back. I don't know how to get it, but at least from 1982, we've had 1, 2, 3, 4, 5 recessions. This recession didn't last very long because of the Fed. But, I mean, you're still massively inverted on that. And then we can just simply pull up the 10-year, 2-year. I don't see it. Damn it, what happened to it? All right, so let's go pull it up. 10-year, 2-year. No, that's not it. Here we go. Oh, damn it. Are you serious? What have I got down here? What is this? We'll get rid of that. And we have to fix this because you can't see it. We'll just set this line to white. So yeah, we're on Bitcoin. Let's go to the spoos. Let's go to weeklies. There we go. So it looks like on the 10-year, 2-year, there was a worse inversion that happened in the 80s than what we got now. But the red line is the zero line. right? Not the white line. The red line is your inversion. So back in the 80s, that yield curve inversion was bad, brutal. And it lasted from what? August 78 all the way until 80, April. So almost 2 full years. And the inversion we currently have, July 2022, Sep 2023, because we're still inverted. But if we just look at bonds, I mean, you can look right here at the yields, right? Your 2 years at 5.1, your 10 years at 4.5. This has to be lower than this. As long as this number right here is lower than this number right here, you're inverted. And then here is the same number. So this needs to be lower than that, and this needs to be lower than that. And then you'll no longer be inverted, and then typically that's when the recession happens, once the yield curve uninverts. But you got a long ways to go before the yield curves uninvert, because if you just look at them, there's the 30-year. Look at the 20-year, the 10-year. I mean, it's screaming to the upside. This usually only goes down. Not anymore. When did this start? Oh, the pandemic. That's weird. Everything changed then. So your 5-year, I mean, all your yields are pumping. So that means your 30-year bonds getting killed. Your 10-year getting killed. 5-year getting killed. And ultimately 2-year getting killed. What this means, in like the shortest, easiest version that I can explain it to you, is simple. Nobody is willing to, put money out 30 years. They're all on the close month and the close years, because they have no hope for the future. Essentially, the future outlook is not good. So they're putting their money in closer, near-term things. When the economy's working correctly, you get paid more to put it in a 30-year, usually, when everything's working right. But when it isn't, people stay close. They generate more yield by sticking close. Like, why would you buy the 30-year if you can only get 4.6% when you can get 5.5% on a 3-month? You wouldn't. So that's the problem. That's the problem in a nutshell. Now, Bitcoin did make a big, huge run, but it had a lot to do with the Fed. And a lot of people had free money, if you remember correctly, as well. Stimmy checks, baby. So I am for Bitcoin. I hold a lot of Bitcoin. I want Bitcoin to go higher. But the reality of the situation is, right now, the structure of Bitcoin does not look good. I mean, if the 200 holds, then yes. You know what I'm saying? Hell yeah. Because when Bitcoin fluctuates $1,000, it hurts me, right? It literally hurts. I open up my cold storage wallet and I'm like, ooh. You know what I mean? And then Bitcoin's up and I'm like, yes. But then For the last, 10, 15 weeks, it's been, oh, I don't like that feeling, right? It sucks. It sucks. So it's only a matter of time before I cut that in half or something, because it's too painful to watch at this point. And although, I would love to have whatever hopium all the other big, moon boy Bitcoin people have. Oh, it's the money of the future, the Michael Saylors of the world. Bro, let me tell you something. He ain't gonna get liquidated. He's got free cash flows. He could put debt on stuff. Like, this man is situated financially. But Bitcoin could go to zero and he will just still be as rich as he was before he started buying Bitcoin. Now, he will have lost some money, but like I said, he's got stuff that he can convert, right? He's got other means. And he said that a lot. But when you watch him on Twitter or X or whatever it's called now, he ain't nothing but a moonshot, just straight up bull. Like, Bitcoin is the way. Okay, if you say so, but the price chart ain't saying so as of right now. But Bitcoin can moon. We know this. I mean, every 4 years it has. But this is the first time that Bitcoin will experience a high interest rate environment during the halving, because the halving is coming, right? And the Fed, if they don't start cutting rates, then the halving is going to have probably a different reaction. Now, if you get that Bitcoin ETF, then yeah, maybe it still does moon, right? But at the same time, who knows? Who knows? If you got your life savings in it, it's gonna hurt if it goes down, down, down. Don't be that guy. Put a little bit, in it, so that way you can capitalize on the moonshot if you get one. And if it doesn't happen, oh well. I'm not going to allow my money to go away, right? What I own in Bitcoin right now, I look at in terms of USD. Other people don't. Other people think fiat's going to go to zero and this and that. But if fiat goes to zero, let me tell you something. You're going to have a lot more problems than how much Bitcoin you own. Because if fiat is worthless, then so is your Bitcoin. Bitcoin is priced by the fiat it's traded against. So if the fiat it's traded against isn't worth much, then your Bitcoins aren't going to be worth much. Right? I mean, just look at Bitcoin versus the Turkish lira. It's making fresh all-time highs. It's trading at what? $790,000 or lira? 790,720 lira is what the price is on Bitcoin right now. But still, that's still only equal to 26,000 US dollars. Yeah, I mean, I don't get it, but maybe it's just because I'm a trader and not a crypto enthusiast. All the people that got rich during big bull markets on Bitcoin, it's because they sold their Bitcoin and converted it to cash. And then they converted that cash into big, nice mansions and stuff like that, right? Yeah, that's what you do when you catch a nice, huge bull run on something. You don't just sit in that thing and, yeah. You can buy stuff in Bitcoin in other countries. I see a use case for it, but as of right now, the use case for me on Bitcoin is to make more money. I think that's everybody's goal when it comes to Bitcoin, is to make more money. Because think about it. As of right now, if you own a lot of Bitcoin, you can sell it if you need a doctor's appointment and you can't pay your doctor's appointment in Bitcoin. You'd have to sell some of your Bitcoin into fiat, and then you can go to the doctor. I don't know. I got into Bitcoin because I've seen massive gains that it provided and the volatility it provided, right? Bitcoin used to be, it still is. I mean, it can be very volatile, and those volatile moves can make quite a bit of money. What would love your opinion on oil and gas. Thanks a lot. I don't know the gasoline ticker, but oil, I'm watching it. It just, the trade didn't work out today. You know what I'm saying? My trade didn't work out today on oil. As you can see, it was down like 0.36% when I took the short, but it's turned into a bullish candle. It is no longer down on the day. It is up 0.47%. So, I mean, it's just, the higher it goes, it's going to jack inflation up. And oil is very highly manipulated. I mean, as far as supply and demand terms, right? They can cut supplies, and when they do that, obviously, oil goes up. When the U.S. government floods the market with oil, then it goes down. So it's very difficult. It's a difficult traded asset. But I know a couple people on Twitter that only trade oil. So, but it's bullish. It's definitely up. I mean, it hasn't had 12 straight weeks up like the dollar, or 10 straight weeks, because the week isn't over yet, just getting started. But I mean, it went up. You had 2 weeks of pullback there, 3 weeks of expansion, 2 weeks of pullback. Can we get another 3 weeks of expansion? Absolutely. I would love to see a retest of that monthly resistance. This price right here, right? 86.36. If we get a retest of that, I'm going to be a buyer on oil. But I was just trying to get in a day trade scalp on it today, looking for it to potentially break down, maybe test the 21, come down here, test these highs. It just didn't make it. Literally, all it did was liquidated, what is that, Thursday's low, and up it went. And it went up quick. I was looking for the short right in here, and this hourly closure basically told me that I was wrong. Next hour, we got a nice little drop, but then once we got above that, I was like, I'm out. X the position. Take it off. And to be honest, it did hurt the P&L on the day, but it is what it is. I can scalp the S&Ps or something, get some of that back. The S&Ps is having a little bit of a pullback right now. Let's see what their daily looks like. Yeah, you took out yesterday's low. I mean, you're getting ready to test the 200. I'm sure buyers will step up here. I mean, people think the S&P 500 is the bulls anyways, the people that think that we've missed the recession or we're going to have a soft landing. This is going to be a buying opportunity for them. If you look at this on a longer term scale, like on the weekly, your 50 never did cross your 100. Let's get rid of the 200. Let's get rid of the 21. You never crossed, the 50 never got under the 100. So in percentage wise, it was a bear market as far as, you did have a 20% drop, and that's technically what determines a bear market. You did get that. And then the other technical term for a bull market is when you get back above that 20%. But do you go 20% from the lows, or do you go 20% from the open of the year to date? If you go from the lows, you're still up 22%. So in technical terms, you're still bullish. But I mean, if you just look at this on a longer term scale, like, this thing hasn't, since this right here, since it crossed here back in 08, and then you recrossed back in 2010, you have been in a secular bull market. Right? Right there's your cross. So since then, you've been in a secular bull market. And one more time, you did not cross here. Not yet. Can it happen? Yep. If we take out these lows, it probably will happen because it got real close here. But these are, like I said, buying opportunities generally. If there was a buying opportunity, buying opportunity, buying opportunity, buying opportunity, buying opportunity, buy. Yeah, you got messed up there, you got messed up there, but buy it, buy it, buy it. You see what I'm saying? Messed up here, right? But if it comes back in that 100, 41.51, there are going to be buyers. Unless a recession is imminent. And the only people that are going to be able to say that is the MBER. Right? We need 2 quarters of negative GDP. We get that with the other things that we currently have right now, where manufacturing PMIs are, where the few of the other things that they look at to basically classify a recession has to happen before they will classify it a recession. But is the market going to find support before then or after? Usually the market has already taken a pretty decent tumble before the recession happens. And we can look at this simply by going back into the SPX. Pull up the recession indicator here. And you can see they said the recession started there and then it dumped, but they predated it, right? They go back in time. They say, well, it looks like the recession started on this date, but it wasn't until here or in here when they said it. So, next recession, please. Thank you. So, market takes quite a tumble here. That's when they claim that we were in a recession. We lost the 100 on a weekly closing basis. Right there. And that's, the recession happened before that. But like I said, these guys, when they finally say a recession, they're going to say it's not going to start from that day. Like, they're not going to nail the recession down perfectly. A recession is going to happen. And then 6 months from then, they'll probably say, yeah, we're in a recession and we think the recession started 6 months ago. So it will be too late by the time they announce the recession. The market will have already sniffed it out. So we got a couple things to watch here as far as Oh, I shouldn't have closed that one. As far as when to be a buyer, when to be a seller, right now I'm a seller, and I'm a seller up here as well. But down in here, I will not be a seller, right? I got to sell the swing highs. I can't sell swing lows because I take a chance on selling it here and then it just going right back up. So we need to mark this again. It's $83. So right there, 42.36. 42.36. Boom. This is the lower edge of the expected move for this week's range. So if we get down there, I might buy calls. That was the game plan for the week and for the day. In the middle of the range, there's not much to do, right? Except for scalping intraday. Scalping intraday. Yeah. But as far as oil, it's up. Gas can be found under nat gas. Oh, you're talking about natural gas. I thought you meant gasoline. I got you on the nat gas. I got nat gas futures like here. Yeah, they're spiking. I would assume coming into the fall that natural gas prices will go up because the fall and the winter is when natural gas is more prevalent because a lot of people use it to heat their homes, right? A lot of people use it to run their stoves and stuff like that. So, yeah, I can see more demand picking up in nat gas. Would I buy it today up there? No, I would not. You got to buy supports, my man. If you're new to the channel, welcome, first and foremost. We classify supports as the lowest closes on a bearish candle. So that's the area where you look to be a buyer, right? 247 is where you should have been a buyer. In this case, you could have been a buyer up there, right here. You could have been a buyer here, but then you would have been stopped out. So that's the problem once you start to climb. You're really into resistance right now. So I don't think I would be a buyer on nat gas right this second. But if we get a pullback back down to 256 or even 260, then you could potentially be a buyer of natural gas because fall is officially here. Will you get a pullback back down to 260? Probably not. Not if the demand is already picking up, which I'm sure it will be, right? I'm sure it will be, but I wouldn't expect nat gas to get back to $9. I wouldn't expect that, right? There's a war going on and all that stuff, and that affects commodity prices hugely. So, but I mean, I don't have very much data on that. Let's go here. Here's the E-mini nat gas futures. Let's see if we can find like an overall base. It looks like 250s has been a place to be like, that's what would be considered like a normalized area of potential demand, even though prices traded under it there briefly. But recessions affect everything. But this is another thing that could be said. I mean, this could simply be, it could be one of two things. It could be a bear flag, or it could be a Wyckoff accumulation formation, because you got your low, then you got your spring, and then you got your accumulation. But the next thing you need is you need your breakout. You need that breakout. You have, according to this chart, the E-minis, right there is resistance. So we're bearish on the week, just barely. It looks like maybe watch 270 for a buying opportunity. QG1, E-mini, Nat Gas. So let's see if they got a micro. QG1. They do not. All right, let's see if they have options. No options available for this symbol. All right, so here's the E-mini. No. QG. Let's pull out the E-mini. There is not much liquidity in this. Holy cow. What does it cost to buy one contract? $2,000. So that's not bad. So I could trade the E-minis. It costs $1,989 to buy one contract of nat gas futures. But damn, do they ever move slow. And they are not liquid on the 1 minute time frame. Let's go see if they're liquid on the hourly time frame. Yeah, okay, so there's a little bit more liquidity on the hourly time frame. Like I said, you're coming into resistance, so let's see if we can get a pullback into the 280 area. And if we can, then maybe we'll look to put on a nat gas futures buy. A bid. Because, like I said, I can afford it. I wonder what it costs to short it. The same amount, which is odd. Usually to short it, it's more, but yeah, account doesn't have sufficient buying power to buy two of them or sell two of them. So, I mean, yeah, I'll keep this on watch as well, because it is fall and things like this, there is seasonality, okay? There's definitely seasonality to this. Like I said, people might be buying this just for the simple fact of it's getting ready to be the wintertime again, and that's when this thing is at peak. But here's last October. All right. October, November, December. So right in through here is where you would expect peak demand. Just look at it. I mean, wouldn't you agree that December all the way to February, that's the coldest parts of the year for any country or any whatever state? Those are your coldest parts of the year. And that's when natural gas plummeted. So there was a massive supply shock or something, because it got absolutely annihilated. So for seasonality, 2022 into early 2023 was not good on nat gas. I remember a guy blew his whole account up and his whole hedge fund up shorting natural gas futures. I don't remember when it was. I think it was during this run right here. But he blew his whole hedge fund up. It was all over the news. He was just short, naked short, QG1 futures. Oh, what an idiot. Glad you don't have money with that guy, because it's gone if you did. Thanks for the wisdom. It's my pleasure. But yeah, I think it could go up. I mean, if this is an accumulation formation, it sure does look like it, because the Bears had opportunities, multiple opportunities to punch this thing down into the 160s, and they didn't. So there can only be one thing that could be gleaned from that fact, and that is, yeah, they're not selling it, they're buying it. You can see the straight line across here, and these are the actual E-mini natural gas futures. So this is what I would look at. I wouldn't look at anything else. ETFs and all that stuff. If you can trade futures, which you could if you opened up a TD Ameritrade account and signed up to be able to trade futures, you could just trade the outright actual commodity itself. But if we could get a pullback to 255-ish, I like it. I would take a chance on it for sure. But I would also, after this live stream is over, I'm going to do some research and find out what the hell happened there. Like, is it because of the European war? Or something else? Did something else go on? I don't know much about it. Thank you for sharing. You're welcome. Yeah, people don't want to hear this. People don't want to hear this. I don't know what you mean by that, but people should listen to some of the things I say. Trust me. A lot of it's rants, but it is what it is. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.